So just to confirm, guys, we are looking at a TP of 107.90. We are looking at an entry at approximately 108.56 with a stop loss at around 108.80. Okay. Good afternoon, ladies and gentlemen, and welcome to this afternoon's Markets Now session. Hope you're all doing well out there. Good to see you all inside the trading community today. Good to see you guys out there on the other side of things as well as we open up the doors for our weekly Wednesday market mashup. Hopefully it's going to be a good US trading session this afternoon after a incredibly disappointing one yesterday, where your commander-in-chief managed to achieve an incredible 1 to 0.78 in the US 30 Dow Jones. It was a absolutely mind-blowing US Open for me yesterday. Incredibly proud of it. Got outdone by a good couple of our members inside the trading community with entries as well, which I was had to hang my head in shame as I had the worst entry of us all in the US 30 Dow Jones. So well done for those of you who definitely got the beat on me on that one. Scotty D, I know you are one. Braden as well is another. But yeah, hopefully we're going to see something better today for sure. Hopefully we're going to see a bit of a better day today. We had a relatively good European Open this morning. In the DAX managed to land a 1 to 2 point. I landed a 1 to 2.4. The markets were pretty good this morning for the European Open. We actually got some great pushes north. We had the DAX trade over 1% from low to high, and we also had the UK FTSE, which equally traded very well to the upside as well. I'm gonna have to look at resolutions for this issue. You see this issue. I don't know. You'll probably be able to see it nice and clear. A lot of latency comes through on TradingView, right? But as I found out through trial and error, this is nothing to do with TradingView and nothing to do with obviously flat batteries in the mouse. It's actually to do with the streaming software that I'm using to record the sessions for you. And when that's running at the same time, and I'm recording something, the mouse starts just lagging and everything runs really slow for some reason. It's a software-related issue. But yeah, there you go. Annoying, but we'll just make do. That's all right. Good afternoon to you, Matthew. Good afternoon to you, H&C as well. I can see we've got Jack in the house. We've got Ryan in the house as well. Good to see you guys. And good afternoon to everyone else. Hey, D. Hope you're doing well, buddy. So yes, pretty good session this morning. Definitely happy with the 1 to 2.4. Better than a kick in the teeth. We have some exposure from yesterday's markets still ongoing as well, which was good to see. We took a hit in the USD yen yesterday from our open portfolio exposure. And that was this trade idea here. We got a trigger in the UJ, which then, it left, obviously it was open for a while, ended up coming and taking us out. And that was at around 20 past 2 in the morning. Unfortunately on that one, we also had a hit in the pound against the yen. This is the problem that I was mentioning yesterday about the exposure in our yen assets. I said we might have a little bit of a rocky... Oh, sorry, it wasn't the pound yen, was it? Yeah, sorry guys. Actually, the pound yen... No, that was a good one. Where was the other loss? We took 2 losses. Positive we did. I'm absolutely sure we took 2 losses yesterday. It wasn't something to do with the stocks. So I took 2 losses from the stocks as well, but I'm sure there was something else that we took a loss in. Hang on a minute. God, man, everything is running so damn slow with that thing open. All right. Well, we took a hit in the USD yen. Cable has been exceptionally good. We did a 1 to 2.4 yesterday, and we've got a second underway at the moment. We decided to split these trades into two. That was my plan of attack, rather than look at the opportunity being staggered and looking at either scaling in, scaling out at the 50% point. I decided that I wanted to break the trades down into two, and that was to mitigate the risk for everyone who's joining us today that isn't there on a daily basis. This is why we chose to break those down into two. And it's going really well at the moment. Obviously, the second one has come close to the target profit, but is now trading at 135.66. So that's a little bit of a shame. But nevertheless, it's still going relatively well. And I'm confident that we should see cable trading upwards of 135.89 before long, which would be fantastic. That's a 1 to 2.4 and then a 1 to 3.17 back to back, which would be really, really nice. But we're not there yet. We're not out of the danger zone yet on that one. Looking at the pound yen, this one was a pretty volatile one. We got wicked in on this move here. We came back down, had a couple attempts at the lows there at around 207.53. Came up overnight, and at about 2 o'clock in the morning, we surged up to target profit up on that one. So that one was good. The Euro Oz, we are still awaiting. This is a trade idea that I am happy for everybody who is not a regular day-to-day to consider this one as a trading opportunity as well. So the EA at the moment, good trading margins, lovely breaker structure point. It has been protected by this area that we are awaiting for it to close underneath. This is a pending order. It's in the market. It's waiting to go. So please feel free to take action on that one if you so wish. Obviously, if it follows your own trading rules and parameters and so on and so forth. We are looking at approximately a 1 to 2.53 on this one. Net return, I've got to be careful now because I've actually cut down my risk now to a maximum of 0.2 per trade. So it's slightly different for me. But the net return for you guys, based on a 0.25% risk structure, will be a nice 0.6 return, 0.6 plus return even from that. So that's, a solid trade idea. No reason why that's been invalidated at this time. We've still got a really nice series of lower highs and lower lows being formed. We are at the moment being pressed against this breaker structure point, which is the floor of a big daily point of liquidity on the higher time frames there. And everything looks good for this one to continue trading lower at this moment in time. I will download that one again and send that out to everybody in the group here today, just so I don't forget. There we go. There's Euros. Good afternoon, Tim, as well. Good to see you, man. So that's the Euro Oz position. We have the Aussie versus the Japanese yen. Unfortunately, even though this one was a clear winner, we did not get down to my alarm, and so therefore I didn't take the trade. It wasn't actually, what I really wanted to see in this one, right, is a breaker structure below this area. This is what I was explaining to the guys yesterday. So this was the breaker structure entry for the trade, but we were trading above that breaker structure point at the time. And so what I wanted to see was price action break into big liquidity first, grab the longs. Once the bid orders have been filled, we then start to see the commercial move in the opposite direction, which is exactly what we ended up having, what we ended up having. Unfortunately, it didn't hit the alarm, so the trade wasn't triggered. But that would have been a really nice trading opportunity regardless. I tell you what, looking at that one now, we've still got the GUs open at the moment. Euro Oz waiting to trigger. USD Yen is completed. I'm wondering if we don't have a stab at the AJ short from this point on. It's a pretty well established range. It's not been too long term, but it's still got sizable margins in there. It's I'm a little bit skeptical about the amount of lows and highs sitting around the midsection. We usually do have quite a strong median in these ranges, but if we go for something very aggressive, so let's say, for example, like this area here for entry, let's just map this out and see where the stop loss would be on the short. So if we target down at the lows again, 107.90, So, yeah. In order to get the stop loss right up above the highs, we're looking at a 1 to 1.77. That's at the bare minimum, just the cusp of what I would allow us to be looking at for a return on our risk. But I'm thinking we bring that down to about here, because then we can encapsulate the high that was made there as well inside the stop. This one, which is pretty strong, I mean, that one's actually been the result of the most recent knee-jerk reaction that we've got going on here on the 15-minute time frame now. And that yields a 1 to 2.5. Minimal spread on this, and cost to trade. Very, very cheap trading assets, so you don't need to be concerned about anything to do with that. Excuse me. So I think we're gonna plow on ahead with that one. I mean, we missed the long, didn't we? We took a loss on the USD yen, so it might make sense to consider taking a short in the AJ from this high. Trade it with the range. If it wants to break out and it wants to go long, then so be it. But I'm happy to put some money on that one. So I'm going to switch that over to a short and download and fire that in as well. All of these trading opportunities that are uploaded in here, I will do my best after the session to upload to the UTCF fund alerts as well, just for those of you who gain access to that. But do be aware that by the time they are uploaded, some of these might have triggered. Do you know what, team? I'm actually going to punch the numbers in on this AJ now. I don't want to run the risk of missing out on the trading opportunity like I did yesterday with the gold trade. Even though that's come bloody close to stop loss, I had to wait because people in the stream had the opportunity to punch the numbers in real time, whereas I had to wait until afterwards. And I was lucky enough that the market actually came back up, but there was a point in time where I didn't think it was going to. Nevertheless, the market is probably heading for a loss at the moment, so it didn't make any difference anyway, but we'll see. We're still in it now. But I am going to punch those numbers into the AJ, so just bear with me for a moment, please. Excuse me. All right. So just to confirm, guys, we are looking at a TP of 107.90. We are looking at an entry at approximately 108.56 with a stop loss at around 108.80. Okay, on that one. Right, moving on. Let's have a look at what else we've got going on. USD CAD at the moment. Still slowly meandering its way back up to big money, up at 136 to 137. The 137 area up at the highs there. I will be interested in this asset once we reach cash rich area there at around 130, yeah, 136.90 to 137. At the moment, carries too much risk. NZD USD now trading down at this area here, awaiting the big short down to 58.60. We were looking at this one yesterday, weren't we? Having a repeat of what happened previously. Now that it's made its way all the way down, it is starting to look a little bit more appetizing. This is ultimately the breaker structure, so an entry below this point is just all we're kind of waiting for here. And it's predominantly taken from the daily chart. So if we look at the daily and see where the big points of inflection are, you can see a lot of commercial trading activity takes place at around 61. We get these big moves down. And we've also recently had the move back up into liquidity with another commercial knee-jerk reaction, which is the one that came down to the low here. We've had a second attempt. And what can everybody tell me about that second attempt? Question time. What can everybody tell me? Not a trick question, guys. Yeah, you're damn right. It's an institutional candle and very well articulated, D. But what else? Even more simpler. Even more simply, sorry. Super simple. High number 1. High number 2. Nah, you guys are trying to think too much into it. I'm after super simple. Not talking about ATRs, not talking about traps or anything like that. It's a, thank you, Scotty D. It's a lower high. Yeah, it's a lower high. That's all I was looking for. The fact of the matter is, the market's come up once. We get the knee-jerk reaction, commercial interest. We come up again. We get the secondary knee-jerk reaction, followed by a nice big move down. But this high is lower than this high, which means buying interest is not there. It is more short than it is long. Not indicated by the current candle, because this could simply just be coming back down to grab cash at a lower point before having the big push. But if buying interest was there, we would see either an equal high or a higher high, an equal high or a higher high, which would show that commercial interest. Now, of course, we are not on the other side of these charts. We are not on the side of the market movers. But by having a good, thorough understanding about how they run their operations and how they work, as we do, we understand that that is the most likely outcome if there was still buying interest. And so therefore, if that is not what's happened, then the opposite is true, or the most probable. So we have the push up. It's attempted to reach that previous high, but it hasn't. It's died at 60.77, about, what is that? 20 pips, 25 pips or so below the previous high. And it's then started to come down again. So the chances of a big push down into 58.60 are now ever more increased. The interesting thing, HNC is actually mentioned about an M reversal. He's not wrong. This could well be the beginning of an M reversal up here, although it's a little bit early on the call. We don't have that information yet. However, what we can do with that information that HNC was so kind enough to give us is plan for the future. Because we have the base of the M reversal there. If we have an M reversal, the market will continue trading down to this point, in which we will get the rebound, the initial knee-jerk reaction back from this area, and the most likely outcome for this market is to trade back to the midpoint of the M reversal. Now, if we go down to a 15-minute time frame here and check out the trading margins on that run, we've got this as our short from here down to here. But we also have the opportunity to buy the market back from 58.60 to 59.25, which is also a substantial trade. So now we have actually planned a couple of steps ahead of where the market's currently trading and potentially get some decent bank. So the first thing we're going to do is we are going to set up our trading opportunity for the short. And bear in mind, guys, this is a relatively longer term trade. And the price time ratio of the previous move that we had, the most recent, took place over the course of 4.5 days. Bearing in mind we're on Wednesday, we only got Thursday, Friday. I'm going to count Friday out because it's a terrible trading day historically. Monday's usually counted out. The chances are we may see target profit on Wednesday morning next week. So right in time for our next weekly Wednesday market mashup. So I don't know why I've said that twice now. It's hopefully that's not going to stick. But yeah, so we could look at the potential here for around a 1 to 2.67 short, which would be that. And then we have the secondary opportunity for a buyback, which would be between these two trading margins in here. Now, we don't know where the relevant breaker structure point is going to be just yet. From previous price action, it's about here. From that high that we can see, let me just mark that out for everybody, which is right there. So that's if we beat that high after breaking into liquidity, the chances are there's going to be a good long as a result on the other side of it. So if we get in our entry above that area with our stop loss just raised up a little bit here, maybe a 1 to 2.63, that's going to be a fantastic trading session in the NZD USD. So we've got a 1 to 2.67 short and a 1 to 2.63 long. Download. I'll fire that in now. And send. There you go. That's going to be listed as a blue for split decision. Right, okay. So I don't want any more Japanese yen at the moment. What else have we got going on? Why is that down there? Hang on a minute. That goes up there. All the way back down again. Pound against the CAD. No. No. Pound against the Australian dollar. I think the thing that makes me a bit enticed about the pound instruments is the sizable sell-offs we've had recently. We've had such big runs in the pound. Yeah, we've had some such good runs in the pound at the moment. I would like to think that we will see the buyback opportunities coming back into some points of liquidity here. But frankly, there's a lot of technical risk factors lining around this area. Although we haven't seen these areas for a long, long time. I wonder what the margin's like on that, just as where it is now. Yeah, that's not bad at all, is it? That's really not too bad. Would expect the GA to come back to around 193. We've got higher lows formed. We've got higher lows and lower highs formed. So we're reaching a bit of a pinch point here at the moment. Take low number 1 to low number 2. I'm going to drag that up there so we have a good estimate of what we're really looking at for our trading margin. We're going to drag another one from this high to that high. And we're going to drag that down there. And we're going to use this as our trading margin. What this does is it increases the probabilities of success. That's what it does. It narrows, it filters out the eventual possibility of the market bouncing from there and coming back down and us wasting our time or our money, most importantly. So now what we're going to do is we're going to look for a point of liquidity to use, which is slightly difficult by the point. I mean, ultimately the market, I believe, is going to be at 193, regardless of the descending level. That's one hell of a bar in there, isn't it? So let's just look at that. That's the point of liquidity in there. What are we going to do about a break of structure of this area? Frankly, the market's kind of given us one right now. We've got a TRF situated around 192.20, which is almost at the 50% point, interestingly enough. And we've got the breaker structure point going on in here. I think what I'm going to do is I'm going to add a little bit of a variable in here, something that I don't usually do. And I'm going to wait for the close of a 15-minute candlestick above this breaker structure point, rather than this the simple breaker structure. Reason being, if you do wonder why, is because of what's just recently happened. Because we've just had a wick through and a knee-jerk reaction. Now it's starting to form an inverted hammer. So generally on a daily time frame, when you see a candle pattern like that, it's followed up with a bit of a move in the opposite direction. It's not a major turning point indicator at all. But generally you will see a bit of a move in the opposite direction. So I think what we're going to do is wait for the 15-minute candle to break and close above our breaker structure point prior to us taking the trade. Okay, so it is going to take a little bit more management than you would see usually from these kind of pending set and forgets on the FX market, okay, team? If you do want to take it. And we're going to aim for a 1 to 2.65 in there. Don't know why that's the running theme today, but it just seems right. And I think just so that we can be absolutely clear, await a break and close above the break structure point prior to entry. All right. There shouldn't be any kind of ambiguity at all in this one anymore. Nope, not looking for a retest on this one. And I am happy to explain why in a moment. Just bear with. I'm going to fire this out. There we go. Right, there we go. Okay, so D says, and not a retest, i.e. alluding to the fact that we could possibly wait for a retest or should possibly be waiting for a retest. The reason being is, for one, where we're trading away from, where we've traded away from up here, for example, and also because of the intraday break closes and retests that we've had the whole way up here so far. The most important, however, the most important one being is where we've traded to. Now, the money in the market, okay, is there. Okay, this is the cash-rich area in here. This is where all the money is. This is where the orders are. There is one other area, though. And the other area where the orders are and the money is down here, which is where the market came from to hit this area in the first place. After reaching this inflection point, which comes as a result of hitting this area in here, just above that point in liquidity down there, we can now almost marry these two up to create just one zone, right? And that is just one nice big inflection point. If we look at the daily time frame, just to confirm our thoughts here, and let's say, for example, we were to delete these two zones, copy and paste this one, and bring this down to here, for example, covering the lows of both the recent move down that we had and the lowest point that we had, and we go back in time, we can now see the kind of interest, commercial interest, that this level has had over the course of the last couple of years. And it's a lot. We've had a lot of commercial interest from this point, i.e. when the market comes down, we have big commercial moves as a direct result of hitting this level. This area in here example is a prime example of that kind of power that this level has at 191. So now if we scroll all the way forwards in time, what we are looking at and what we are trading is actually part of what? What are we doing by taking a small slice of this move here, but looking at it in a broader spectrum? Absolutely right here. Yes, we are. But even simpler, what are we doing? It's something that you have just said. That's today in particular. You've just alluded to. We are trading a part of a process. And what part of the process are we trading here on the intraday scale? The retest. Bacon Dude. Hey, Bacon Dude. I'm sorry, but do you know what? I've just seen your message. Whoops, forgot about the stream. Here I am. Yeah, no problem. Good to see you, mate. Good to see you. Yes, that is exactly what we are doing. We are trading a break, close, and a retest. We are trading the retest move, but on the daily time frame. So that's what's going on when we zoom out. See, all we need sometimes is to just zoom out and not be so laser focused on the smaller time frames, which is that's obviously that's not on you. That's just the nature of streaming and, you know, running live trading workshops and stuff. But that's exactly what we're doing here. We are taking a small slice of a much larger retest to liquidity on the daily time frame. So wait for the 15-minute break and close above this level, and then we can jump in. At the moment, it's a 1 to 2.65. We may, I mean, to be honest with you guys, look, we've just had an open above the breaker structure point. Right? So now we're actually getting a retest of that breaker structure point, interestingly enough. So now what we need to do is we need to draw a, dependent on if it's a red candle, we need to draw a zone in above the top of the red candle, the open of the red candle, and then we can, you know, go from there. The only downside to this, because it does look like the market's getting going now, the only downside to this is we do fall trap to having to take the trade wherever the bar ends up. So just make a note, if the bar ends up trading quickly and we get to a 1 to 1.42, for example, I am not interested. Okay, the minimum risk reward we want to be walking away with today is a 1 to 2.4, let's say. That's the minimum that I'm going to be happy with. Otherwise, I'm just not interested in it. All right, team. So, yeah, just wait for a contraction. Wait to see if the market comes back down to retest and then jump in, whatever it may be. But we're not going to take the trade at a 1 to 1.5. So let's just stick an alarm back in there and maybe get a heads up when it comes back down. Okay, so that's that. I'm not going to focus anymore on the FX space now. Let's move on up to some of our metal markets. Frankly, we've already got exposure in gold here at the moment, team, so I won't be offering any further gold trading opportunities today. I will just have a quick flash over at silver, though. So we've currently got long exposure in gold, which looks like it's running out of steam at the moment. Wondering if we cannot hedge ourselves in some silver at the same time to mitigate some of the risk that we've had from gold. Don't want to be in a silver trade too soon because gold is still running. So the breaker structure for this one would be here. So we've got lots and lots of nice highs in here. We've had a couple of wick throughs. We do have to take that into consideration. But ultimately, that is the best break of structure point that we've got on this chart at the moment. So if we use that as our break of structure and we anticipate that the market's coming back up to 78, what is that, 65? Yeah, 78.65, which makes sense. Why does it make sense? It makes sense because of where all of the, again, and I'm going to keep coming back to this over and over again, the commercial trading activity is. Okay, this is where the banks are. This is where the funds are. Okay, this is where the big money is. It's where what everybody calls nowadays the smart money, although that is dying off, thank God, because it's a crass term. But ultimately, yes, that is where the smart money is in the markets. Okay, so what we're doing here is we're looking at the anticipated move in silver. We're looking at where the market orders are and where the chart's going to go to gather the rest of those orders. So the breaker structure here to get the rest of the move back up to what 70, what did we say it was, 78, 70 or something, is going to make perfect sense. So what we're going to do is look for a breaker structure long, silver to 78.65, and the stop loss in silver at around 77.10 for a 1 to 2.27 long. Really nice little intraday trade. Really, really nice. Right. There we go. And, oh. Okay, that's that one. Yeah, like I say, nothing we can do about gold at the moment. We already blasted through the ceiling in UK Brent. I'm wondering if we can take this back down, but fundamentally doesn't make sense now. We are seeing the beginnings of a new demand vacuum coming into Brent, and that's as a result of the Fed situation and real rate decisions coming through from the US, which is causing demand. The other thing that is causing slight demand is the fact that we were looking at easing of tensions between the US and Iran. Trump wanted to cool off the tensions, and now the tensions are elevated again. So we've had a temporary push in oil prices. I'm not sure if it's going to last, which is why I'm very skeptical about trading further longs. But at this moment in time, that's where we are. I don't think I'm gonna trade this one again yet. I'm probably gonna take my foot off the gas on that one and enjoy a decent win, and that'll be that. Looking at natural gas, we've made it down to liquidity finally. Had a little bit of a gap overnight, not a huge one, and it has now slowly hit the 340, was it 335 S&D down there. I would like to see a deeper push into liquidity at 325 before looking at the buyback to 375. Make no mistake, everybody in this trading room will be well aware of the natural gas opportunity. You should already be anyway, because frankly, it's on the weekly report almost every single week. So do be aware of that, and please, look at the report if you ever, or just keep it open. If you forget about it, it's on you ultimately. But we're not there yet. I want to see a deeper push into liquidity, grab the orders, and then we get going to 375. Hello. Yeah, there's the contraction. Now's the real test. I'm going to... The alarm might trigger quickly, but I'm going to put that alarm back in there. I'm not going to punch any numbers in it just yet. Right then, team, let's head up to the US indices. So we've covered energy markets, we've got some fresh metal exposure, and we've got a ton of stuff going on in the FX space for the next 24 hours. So now it's just down to our good old US stock markets. And what are we looking at today? Hopefully not another 1 to 0.73. Sorry, not a 1 to 0.78 that I said earlier. 1 to 0.73, which was my my ultimate trade of the afternoon yesterday. Still liking the trading margins between the point up at the high and this breaker structure area down here. Do you know what? I think I'm actually going to raise this and not care about any of the price action that took place before it. These are going to be the range lows. We've got a nice breaker structure for longs. We're not trading anywhere near that at the moment, though, unfortunately. As of right now, at this moment in time, the US 30 Dow Jones has no trading opportunity at all. And the reason being is because of the fact we're trading in between a dead margin here at the 49.60 area. So I need the market to come back up. We need to gather the orders. We need to gather the money. It's going to be up at around 49.74. Then we can happily take shorts. From where we're trading at the moment, there is the opportunity to short it again between 49.47 and down at the lows at 49.30. So, for example, we can draw in a very, very small breaker structure point about there. And then you can look at the continued short below here down to there. The stop loss for this order is going to be above both of the zones, not just one of them, but both of these areas. And that's going to yield you around a 1 to 2.57. That's the best that we've got at the moment with the Dow Jones. If the market comes down and rejects this area, which is acting as the median of the range here, we may well be able to take a long back up to the highs. The breaker structure for that one, however, is a little bit tricky. It's certainly not a clear path of least resistance, I'll tell you that much. It's about there. And honestly, the fact that we've had a rejection of that low makes me even more worrisome. So I'd probably put that there just to make sure that the low of that move is covered. Increase the width a little bit on it. Something like that. So what we're looking at now is the push into this area, anywhere within this area in here, and then the reversal back up to the highs again. And you will be taking the long all the way back up to the zone at the highs, excluding the breaker structure for the short. Okay, your stop loss for this trade idea is going to be at about 50% of the point of this area in the middle, and that's going to yield you around a 1 to 2.82. That's the best we've got. It looks incredibly scary. Possibly. It looks a bit messy, but that's the plan of action. That's what I've got going on in the Dow Jones today. Moving down to our NAS 100. We've got high number 1, high number 2. About there, we have the lows down here. Excluding big liquidity up at the top and big liquidity down at the bottom, this is going to be our primary trading margins for this afternoon. The breaker structure for the short, again, very similar to the Dow Jones, has already taken place. Unfortunately, that's about there. There is a secondary, but it's so far into the margin, you could definitely get wicked out of that one very, very quickly. In terms of the long, if you want to buy the market back up from the floor, you're looking at around there. But again, that is not great. I think the more aggressive, the better on these, which may sound counterintuitive given the context of the markets and the volume that would, the condition of the price action that we're trading with here at the moment. But aggression in a trading opportunity means a lower stop loss or a higher stop loss, right? Because if we get in here, it means that we're taking the trade back up to the highs. Our stop loss can be all the way down, even there at a 1 to 2.2, which is great. If you want to go a little bit better, obviously you can have have something more aggressive. That's down to you. But ultimately, if I can beat these lows and have them covered, then I'm happy. And I basically can for a 1 to 2.3 there. So that's the kind of thing I'd be going for with the NAS 100 today. As for the short, the only short availability is if the market comes back up to the highs, we dig in to where the cash is, and we start to see the sell-off. And then that's going to be a move from around there, all the way down to the lows, all the way down to the floor. Stop loss for this one. Again, it doesn't need to beat every single high, just needs to beat some of them. And I can have that there at a 1 to 2.78, which is also an equally really nice trading opportunity. So that's going to be the Dow. And I'm going to avoid the S&P 500 because if you're trading the NAS 100 in this day and age, it's kind of redundant. Alongside the US 30 Dow Jones, that is. And yeah, the S&P. Yeah, I mean, there's just no need to. There's no need. Right, team. That is it. We are approaching 2:15, which means you guys have got about exactly about 16, 17 minutes to go before the US bell rings this afternoon. Lots to consider. We've got lots of exposure in the FX space. We've got silver long for those of you who are not with us every day. We don't have anything in the energy markets at the moment, but we are awaiting potential in natural gas for the buyback. And then we've got split opportunities in the US 30 Dow Jones and the NAS 100. Are there any questions, ladies and gents? Any questions at all? All good? All clear? All clear. Excuse me. Gulping down my coffee. All good, thanks, D. All good, Ryan. Yeah, excellent, guys. Well, listen, I'll wrap things up there then. I am going to be here and available all day. So if you've got any questions at all, please fire them out into the general chat. I will upload all of the trading opportunities again to the general chat, and I will put them in the UTCF fund alerts as well. And look, guys, above all else, remember, risk management is key. 0.25% per trade, no more than 0.25% per trade. You don't have any major news events going on today. There's nothing that's going to get in the way of your trading cycles today in terms of volatility strikes or anything, apart from obviously Mr. Orange, who can shape narrative at his will and generally does. So do be aware of that one. But as far as the hardcore economics are concerned, we're all in the clear. We're all absolutely fine. So take care of yourselves, guys. Have a good one. The tangerine toddler, yeah. Have a good one this afternoon, and I look forward to catching up with you again soon. So I'll see you then. Thanks a lot. Bye-bye.